and we're going to talk about that in just a few minutes. So before we dive in, we understand as risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you are trading stocks, options, futures, forex, cryptos, you know the risks. If you're following me out there on social media, make sure you're following the real me, youtube.com/Chris Pulver, Mondays and Fridays for the Pulver Report, and other respective outlets at Real Chris Pulver on Instagram, Twitter, TikTok, Facebook. Make sure that it's me, and you're not getting messages from somebody that looks like me or poses to be me. That is fake. Flag them, block them, kick them off. All right. All right, let's get started. Let's dive into the charts. Happy Monday, everybody. So we're just taking a look at markets year to date. Nasdaq still down 22.58% for the year. S&P down 14.66. This is as of Friday's close. Dow down 11.52. The 10-year back above 3%. Bitcoin hanging at that $20,000 level. Had a nice rally last week, 21,500. And Ethereum, big news this week, Tuesday through Thursday, going from the proof of work to proof of stake. And we're going to see what that does to the overall network. Maybe that's a boost on crypto. I know the SEC is kind of dragging cryptos through the mud right now, so we'll see how this all plays out. From last week's movements, everything in green. Dow Jones up 2.66%, S&P up 3.65, Nasdaq 4.14, Bitcoin up, like I said. We're going to go to the charts here. I was taking a look at some of these railway stocks. If anyone was into the news at all, perhaps you've seen what's been going on. Potentially a strike with about 90,000 employees. Rail employees that could be disrupting close to $2 billion of activity per day. It's a big deal. Things that you don't even think about, semiconductors, fertilizer, grain, cars, make their way to us in factories by rail. So that's a huge disruption if it goes through. I know it's being watched closely, but I'm going to be exploring some of these potential stocks this week to see if we have some strikes. Does this mean lower stock prices for these railways or higher? We'll see. But I'm going to investigate and explore some of the fundamentals of some of these stocks. So taking a look at that this week. Expiration wise, we have a ton of stuff going on in equities on demand. Let me go back to this is August. I've got September 9th in here, so I'm going to update this to September 16th. And lots to review this week. Lots of covered calls and a handful of credit spreads. I think we have 10 credit spreads that are going to be expiring this week. We took a lot of new trades last week. We have some pending orders. We'll be watching a lot of stuff this week. Now, like I said, CPI data. Let's go to the news really quickly. Check out the calendar for this week. So I have a whole theory about stuff. And first off, let me say hi to everybody. Log into the channel. Check out. Hey, I just had the old Beyond Capital Group pop up on my phone for notification. All right, making some progress. All right, Ruth Ann in the house. Peter, good morning. Gary, good morning. Chris, Joe, Moach, like chocolate. Good morning. Jason, what's happening? Sterling, good morning. Craig, good morning. All right. So economic calendar for this week. CPI is really the big focus. Okay, it's going to be Tuesday at 8:30 a.m. Eastern time. The month-over-month expected to dip down by 0.1% to the downside. CPI monthly 0.3. Now, the big takeaway from this on the news is what's the year-over-year and what's the month-over-month. Okay, if we take a look at this chart, I can go to inflation. And our last print that we had for, I guess, July, right? This is the print for July. It was our big drop from 9.1 to 8.5. Now, if I zoom in on this, the data this week is going to be important to watch. In fact, if you've been trading, equities, you've been trading options, you've been trading forex, some of the biggest volatility days we've had have been revolving around CPI data from not just the U.S. but other countries. Central banks, yes, they're raising rates, and we know it. There's a tightening cycle going on pretty much globally, with the exception of a few countries, which is interesting. Russia's cut rates, China's cut rates, some other emerging markets have cut rates. Turkey, I believe, with like 80% inflation has cut rates. But for the most part, central banks are raising rates. And the ECB raised rates last week by 75 basis points, which brings them up to 1.25%. The Fed is due to raise rates next week on Wednesday with FOMC, expected to be a 75 basis points hike. And this is what I want you to pay attention to. CPI data this week. Again, this is my opinion, but I think there's some validity to it. If the CPI data prints a better than expected, as in like a lower print, right? Obviously we're anticipating, we want to see lower inflation. So if we print a lower trend for month over month and year over year, I think this bodes really well for any type of risk on trading or risk appetite. Okay, and here's why. If we combine where this is, and look, the expectation is by 2023, the Fed is looking at this inflation target to be around 4%. Their ideal target is down to 2%. Okay, that's a long ways to go. And do I think it gets there in a straight line? I don't know. I don't know. But a print for tomorrow at 8:30 a.m., we're going to see what it does. If it trends lower, like I said, if it trends lower down here, that's good. If the month over month is down as far as trend, if the year over year is down as far as trend, I think what this translates into with our equities move is we will finally see what this recent recovery is made of. I was a little concerned going into last week that we've had this rally. Okay, last week actually I just did a video with Jared, my partner at Beyond Capital, and we've got a video coming out this week that is talking about the record amounts of put options by institutional traders. $8.1 billion in put option volume just last week. That is 3 times more than in 2008. So there's a massive amount of hedging, a massive amount of protection, just in case things get really nasty. Now, technically last week in the trading rooms, I talked about this level, this Jackson Hole sell-off right here, and this monthly pivot. We had 3 days rallying towards it last week. Okay, pre-market we're a little bit higher. I'll show the SPY here in just a moment. But as we have inflation data coming tomorrow morning, if it prints with a trend to the downside, I think that this rally will continue. If we have a flat, the same, or a higher print inflation, I think this Jackson Hole pocket becomes resistance and this market resumes the downtrend. So if I'm putting out a little bit of a forecast this week, that inflation data will likely influence whether we see the bulls or the bears really step up their volume trading this week. Okay? Now, traders know this in equities on demand. We are prepared for this in case it happens. We're trading a lot of credit spreads. We took some in-the-money bear call spreads. We will make some money on the way down. And we will also have the run of pretty much any stock we want to buy on the cheap, hopefully, depending on where our credit spreads can run as far as long puts. I know I have to manage a few this week. But if the bulls, on the other hand, can take this higher and we can close above this Jackson Hole pocket, we can close above that Jackson Hole candle, then I think the bulls might be able to break the cycle here because this has looked an awful lot like 2008. A lot like it. If you don't believe me, go back to 2008 and literally watch how it fell because this type of behavior so far is eerily similar. And that potentially brings in that threatening move. Plus, we have a fifth wave downside. Plus we could have past resistance at the pre-COVID high becoming support. We talked about all that in the trading rooms. Okay? But the market has a way of pricing in things ahead of time. And so if inflation data trickles lower, which is what the market wants to see, I think for the first time in many, many months, the market might be able to think forward. Because here's how I think this impacts the Fed rate. If we see the trend to the downside, I don't think the Fed is going to change their path of rates. Okay? But what I think it helps the market do is forecast that the Fed will not be any higher than what is anticipated for this year. Okay? Right now, this is your September expectation, an 88% probability that we're going to see a 75 basis points raise because 2.25 is the current rate. And as of next Wednesday, the market's anticipating a 3% official cash rate, which is a 75 basis points hike. Okay? Now, drag this into December. The market expects with a 72% probability right now, okay, and this is subject to change, that the 3.75 will be where we're at for the end of the year. This target hasn't shifted in about a month or two. Okay? So this is my key takeaway. If this target shifts and the market expects the Fed to be a higher interest rate, that is not good for equities. If this doesn't shift, then we can power through. I think the market can be forward thinking once again. Right? I don't think that right now, with having two data points, let's say that we have another lower print inflation, things are looking better from month over month, year to year. I don't think the Fed is necessarily going to soften its stance. I think it's still premature to be like, okay, we're going to start cutting rates, even though the market would love it. I don't think that's a good thing. Okay, so they'll probably stand pretty firm, keep this expectation as is, but not necessarily move the target into a more hawkish stance. Okay, so again, I know it's September. I know that CPI data is this week. I know that FOMC is next week. But I think for this to be the end of Q3, going into Q4, I truly think that sets the tone for where the markets are going to be able to go by the end of the year. Okay, so type in a wire yes for me in the chat. Does that make sense? I'll actually put a question mark myself. Actually, you know what? I should put a poll in here. Create a poll. Question is CPI data. Will CPI data print with a lower trend or stay elevated? And then I'll put lower trend, elevated. Lower trend. What the market wants. Okay, so I'm going to post that poll. All right. All good? Okay. So that's what I think. Talked about this all weekend, and this is where I'm at this week. You know, watching the data coming in tomorrow morning for the CPI, and I think the impact of where the day closes, where the volatility sits, we're probably going to have a lot of volatility in currencies. You know, watching the dollar, watching the yen, watching the euro since they raised rates last week, watching the Swiss, which has been one of the more stubborn, strong baskets in currencies the last year. And obviously watching Euro Swiss as one of the big pairs, you know, dollar index, of course, some of those bar counts looking for a Q3, Q4. Maybe we have a transition coming out of summer trading. So watching currencies, watching equities, and those are the big levels. Jackson Hole pocket, and then set a chart alarm. Chart alarm at this high, chart alarm at this low. To the bears take out 3,900 on the S&P 500. Look out below for that fifth wave to come back to pre-COVID highs. That's a 30% correction off the historical highs. Okay, bulls break this cycle and they get above this level. This is the market's justification for forward thinking, possibly having a rally to go into Q4, and we end up finishing the year not necessarily higher, but we fight back, right? We had a terrible first half of the year, 20+% to the downside. We fight all the way back. More than likely, that happens, right? You know, if the Fed is going to stay higher interest rates for longer, it's going to be difficult to justify any broad growth in tech. All right, so we might see range trading. We might have, you know, some consolidation periods for a couple of years, which we really haven't had in equities for a while. We've had a pretty obviously fabricated and engineered bull market for the last, you know, 4 or 5 years, on top of the 2009 step in where, you know, the Fed essentially saved the day and saved the global economy, and everyone else, you know, did the same thing. We're going to cut rates. We're going to go quantitative easing infinity, and now we've got to the point where it's unsustainable, yet that's the only tool that these central banks have to work with. Okay, Ruth, I think gas prices going down last few weeks help push. Yeah, I agree. I totally agree with that, and that's why year over year is a big print, right? The year over year, which is this rate, you know, I think that oops, let me go inflation. The year over year for gas prices at the pump is a big deal. Okay, that will help drive year over year lower. Now, that doesn't necessarily mean that they're going to go in tandem. We might see month over month elevated. We might see year over year lower, but you have to remember there's that distinction between headline inflation, which includes energy and food, okay, and there's core inflation, which does not. So again, I don't know what the market is going to take. You know, put I guess more of a priority on. Is it core inflation or headline inflation? You know, consumers feel headline inflation because it is food, it is energy, it's things that we are paying for. I mean, Europe arguably is going to have the craziest, highest energy bills all winter long, and they pay a ton of money for energy bills. The companies that service those utilities make a ton of profit. They give it back to the Eurozone, and then they distribute it back to the people. So you're still going to pay crazy high bills, but expecting essentially the Eurozone to like stimulate or give back. It's a weird way to do it. I mean, how would you like to have your utility bills be $1,000 a month, if you're paying like $200 a month and it goes up to $1,000 a month, and you're just like, fingers crossed that the government ends up sending me a little bit of a check to help. Is it really going to offset it by that much? Or it's like, here's $50 to help towards your energy bill. You're welcome. And then we have another round of inflation. Who knows? I mean, you give a U.S. worker $600 and we have what, 10x higher inflation or 4x, whatever. So it doesn't sound like a great idea, but it is what it is. So we'll see how the Eurozone navigates that. But yeah, gas at the pump prices have been going lower, steadily lower. Oil prices have been steadily declining. But look at this last couple of days. The dollar index has retreated off the highs. Oil is jumping up off these lows at 82. I said if oil breaks below 80 bucks, look out to those low 70s. So we're still holding some pretty solid support in here. Have some support, have some support. If oil makes its way back up to 90 plus dollars, 95 and especially 95, then I wouldn't be surprised if we get into Q4. We might see oil back up at $100. Now, is that good for inflation? Probably not. Okay, so realistically, I mean, we almost need to see oil continue to drop in order for the inflation data to tick lower. Again, headline inflation includes energy and food. Okay, and with this railway disruption, if it gets worse, we could see things exacerbated on wheat and corn, which are a couple ETFs that I play as well. So wheat's at 881 and corn is at 27.26. So I'm long in both of those and have been since Q1. So anyway, we have a couple of those trades running in equities on demand. Okay, we'll see, Daniel. 150. I told traders this last week in Flex. I mean, the dollar yen, 147.50 to 150. Those two big numbers, plus some breakout pockets. I mean, here's what I'm looking at. All the technicals line up for a freaking correction, man. I mean, again, technicals line up. The JPY is being irrational. I get it. The dollar bar counts over 400 bars, which is absolutely nuts. I still don't know if we have to have a flash crash. It might be CPI data where we have this crazy high volatility and then the market finally starts to align with technicals. I don't know yet. But I'm still watching the round number. 150 was also like a 1980s past support. If you go to I think IDC might have a feed on this. Let me see if I can go back that far. IDC, let me see how far back I can go in the Japanese yen. Let's go back to the monthly time frame. This goes back to, here we go. So I can go back into the 70s. Check this out. So this is May of 1990. We had a high up to 159. Right in here, we had a high back in 98. So we have a couple of big levels, and a couple things we can measure, and we've talked about this in Flex, kind of the sad reality of, either this is a center high or this is a larger crown pattern looking for some symmetry, and we're really close to hitting that around 147 to 150. So as I've kind of forecast based on some projections, 147 to 150. And again, I mean, we've had literally a 4,000 pip trend to the upside with no pullback. If the Forex market's going to cooperate in any way, shape, or form for some technicals and some wave counts and overextended conditions, we're close to those levels. We just were shy of that 150 handle. We were at 144.98. My 150 trade didn't get entered into. But if we end up finishing around here, at least having a correction is long overdue. So I've scaled out. I've taken some losses. I'm looking to get back in. I go back to this dollar yen on the smaller time frame, and all I'm looking for is a trend line break. As tempting as it is to add in the left-hand side of the trend line and guess where the high is, I don't want to do that. So I'm holding some positions over here. I've got an entry at 147, 147.50, 150, and a high at 145 as well. So this is still left side of the trend line, looking for the right side of the trend line. When this does correct, or if it does correct, my first target is going to be that 200 EMA. And I'd like to see if we can get there, at least challenge this low around that 200 EMA. And if that sets up a topping pattern, fantastic, right? Sets up some type of topping pattern. We take a three-wave move to the downside, fall back into any of this demand, and then from there, the bulls can do whatever they want. The bulls can jump back in and take it to frickin' 200. I don't care. But at least show me that the market can behave and be obedient with a technical correction. I mean, it has been quite the story and quite the irrational trend. So does it come back to JPY or BOJ intervention? I don't know. I certainly don't want to. I wouldn't sleep well at night thinking like, oh, Bank of Japan, please rescue me. I don't think they give a crap about our retail positions. I think what they care about is that they're keeping inflation targets low and manageable. And if it means buying literally every Japanese government bonds, they're going to keep doing it. And my bigger concern is off of the Fed on the 21st, the BOJ and the Swiss are literally in 24 hours. You're going to have those two rate decisions as well. So it doesn't give me a ton of positive mojo thinking about those three central bank decisions in a 24-hour period. Okay. So anyway, that's my thoughts on dollar yen. I'm looking for a trend line break. I want to watch the dollar index as well. So here's the DXY. Right, we're coming down towards this monthly pivot that's back in September. Great. Does the CPI data, and this is what's going to be important to watch. If CPI data helps equities rally, then I think the dollar continues to soften up. There is another large bar count on the dollar. Do we take out a high? Do we end up having this larger 2000, 2002 demand level give us a correction? Inner trend line to outer trend line. Okay, dollar from there can go up. Dollar can come all the way back down to past resistance before it goes up. So we will see how this dollar wants to run. And of course, if it doesn't break the trend line, we come right back down to the 50 EMA, we find this trend line support, and the dollar continues to rally. Irrational as it may be, the dollar right now is still getting all those reserve flows. Okay. So anyway, thoughts on the dollar? Yes, oil jumping off those lows, but we'll keep an eye on that. Pre-market, like I said, it's 8 minutes for the open. 408.76. We're looking for another, $2.5 to $3 open higher. Watch that Jackson Hole pocket. That's where I have some chart alarms set at the Jackson Hole pocket, at the high, at the low. 390 is the big level on the SPY. Qs last week off the lows. Volatility index back down towards the lows. Let me look at something like the VIXM. This is when I have some credit spreads going on as a little bit of a hedge play. Also, SVXY I'm long on. We're opening up at 55.02. I do have a covered call on that one this week at 55. So if we get it called away, that's a $6+ a share move. So I'll be watching that for expiration on Friday. And like I said, lots of notes to review this week for equities on demand. And we'll probably have some new trades thrown in as well for some protection. And never a dull moment. Let's go into some currencies. Let's check Bitcoin really quickly and Ethereum. Ethereum's going to have some big news this week with the proof of stake. So that network shift, we're at 1748. Let me go ahead and set a chart alarm here. That high is 2030. And the low around 1423. So just want to be notified if something's happening price-wise. Let me know. Okay. All right, that's Ethereum. And then Bitcoin. Bitcoin at 22,345. That's good. I'm going to set a chart alarm. Actually, that chart alarm is just at that low around 18,000. One thing that had me a little concerned on the technical side is we're coming back up into this pocket right here at the backside of this little corrective trend line. So, another decent push, back into 23, 24,000. We might be putting in, a run back up to this high. We might end up finding this 200 EMA around 26,000. We still have a lot of this demand and pocket to chew back into around 28,000. There's also some harmonic patterns that traders have been watching with me in the flex room at 30K. I think between 30K and 32K. So we do have room to recover. I just don't know if we're going to have a full-on bull rally or if we're going to see this sideways, right? I mean, this could still just be correcting and going sideways and carving out a consolidation low. Maybe this larger trend line has to break. I actually zoom out for a second. Is there an outer trend line that I need to pay attention to as opposed to this inner? Well, it's pretty aggressive right there. So if I went to this trend line like so, I mean, it might take a little bit longer, but this trend line breaking could show some promise. The bulls could have some permission to rally over here. So we'll see. I feel like it's going to take a little bit longer to carve out these lows, but a risk on rally certainly helps. A big jump in stocks, a big jump in risk appetite is going to help encourage Bitcoin to rally and probably a softer dollar, which that is the correlation I've been talking about since 2010. You look at Bitcoin compared to the S&P compared to the dollar, there's a strong correlation between risk on, risk off trading. Okay, on this note, let me take a look at MARA. We do have some covered calls in this one out to October. A nice little rally. We're at 1468. Those premiums should be increasing a little bit. But hopefully we're going to see this one get back into the $20+ levels. Covered calls at 25, which would give me about $3.30 a share. And I'll try to do my best to roll this one and keep this moving higher. I mean, I really would like to let this one go at $25 to $30 if possible. So MAR is looking good. We took some profit on a credit spread last week with that. And then Riot's another one we're trading for some blockchain. This one's up. We have a 6x5 credit spread, and it's $2.50 above our strike. So we might take a look at this one as well, even though there's still plenty of time left. So, all right, let's get to some currencies in the Forex market. Again, Tuesday volatility expected with CPI. Aussie CAD, I'm still long. Let me go to my, do I still have my dashboard here? Does anything change right here? I'll just give you the rundown of what I'm directionally trading. I'm long Aussie CAD. I'm long Aussie Swiss. I'm done. This didn't update, but I'm done with my Aussie Yen. I did take profit. That was a hedge, although the Aussie Yen is still pushing a little bit higher. So if anybody is still in that trade, we were long as a bit of a hedge. It's still pushing, right? So I was long in here near this little breakout point, and I closed out when it made some fresh highs around 97 and change. So I forfeited about 100 pips a profit, but I also took a nice little hedge profit as well. So it's still running. I would just say break even or better, right? If you're up 300 pips, move your stop loss to plus 50. Don't even worry about it. Trail it. If the market wants to keep going, trail it. But if it's going to turn sharply, if we start turning sharply lower, then I don't want to give up any gains. Make sure trailing stop losses at least lock in for something. All right, Aussie New Zealand still have that 1150 sell trade. Aussie dollar 6700 strong support, 6650, 6625 watching for lows. Also watching the dollar index for corrections. CAD Swiss holding long back to a pocket 7650 or so. CAD Yen out. That was another trade. If you stayed long with that one, like Aussie Yen with the alignments, it pushed pretty nicely. Swiss Yen, I'm bearish. 147.50, 150. I'm looking for a turn on that one to get back to some pockets at 143. I did make an adjustment on those sell stop levels I talked about last week in Flex. I'll talk about that more tomorrow in class during our live session. Euro Aussie, Euro CAD, not trading. Euro Swiss, I'm still bullish on. I'm going to maintain that run to 103.50. Euro Pound, no trade. Euro Yen, I hedged. I was out. I got a nice little profit on that one for about 50 pips. Again, not a big one, but I was hedged long at the top. So the fact that it busted those highs a little bit allowed me to grab some profit. Euro New Zealand, I'm staying out of that one. Euro dollar, I'm still long for a correction on the dollar. We have a high bar count, oversold conditions. Parity keeps holding pretty nicely. So I'm looking for a correction on the euro dollar back to like 104 to 106. Again, that's dollar index related. Pound Aussie. I'm not in a trade on Pound Aussie, but the trend has been lower highs and lower lows. Pound CAD, I'm holding long for these like major 10-year lows. Pound Swiss still holding long as well. Pound dollar holding long. Pound Yen, I'm not in. I like bearish at the highs at 168 and Pound Yen. Pound dollar, looking for a trend line to break. We've had lows all the way down to like 1450 or so, and I want to see that thing return to like 2250 to 2450. So I'm holding long on that one. New Zealand CAD still long. New Zealand Swiss still long at 59.30. New Zealand Yen looking to short at 87, 87.50. New Zealand dollar long for a dollar correction. Dollar CAD waiting for a higher trade to sell or a lower trade to buy. Still in the middle that I don't like. Dollar Swiss took profit on last week. If the dollar Swiss comes back to 95 or lower, I'm going to start buying it again. Dollar Yen, as I talked about for Daniel, 147.50, 147.50 to 150, big levels, big round numbers. You're going back to 1990, 1980 before you've seen levels like that. Plus, we've had a 4,000 pip run with virtually no pullback. So, can the market finally obey, give us some technical waves, give us a correction? I would hope so. But yes, let's watch for a trendline break on the dollar yen. Okay. Okay. I just want to make sure I'm getting some questions here. Shiba Inu partnership with WhatsApp and Google. Oh, okay. Trade at your own risk on that, man. I know. Look, I've got a bunch of people that I know that are still holding Shiba, right? I mean, at whatever quadruple 0 1, holding Shiba and holding Doge. I still know people that are holding Doge and they're holding Shiba and they're hoping that it's like the multi-millionaire payout, which is great. But I mean, look, I don't know what the utility is or the value is in this when you're going to take a play on Doge versus a play on Bitcoin. As far as like a sustainable holding trade, I'd much rather hold Bitcoin. But again, I could be totally wrong, right? I mean, Shiba might be the best thing ever. Doge might be. I doubt it, but still, I'm trying not to get caught up in a bunch of the meme stuff. NCLH, that's Norwegian Cruise Lines. Nice little open at 1483. We've got this one covered out to $14. Hey, now might be making some profit on this one this week. Is it worth rolling? Yeah, we'll find out. Probably not. I think this is a nice little repair. I do have some shares on this, plus I have them covered. I'm in a couple thousand shares, so if I grab 83 cents a share, I'll take it. I said, I don't know, whatever. I'll repair it. What was the other one? FCX. This should be Freeport McMoran. This is a copper play. We're at 32.64. We have a 916 $33 covered call and 32. So yeah, this is good. This one's covered out to next Friday. I'm going to double check and see if I can cover it. I should be able to replace let me check my break even real quickly. I know I have some shares, probably like 1,000 shares of this. And based on that break even, probably throwing in a covered call. So let me just check my spreadsheet. FCX 29.45 covered out to 31.50. Oh snap! So I might end up looking to roll that this week. So that'll be on my to-do list for FCX right here. Where are we at? FCX 916.31.50. Look to roll. Maybe I can roll this, keep the strike price at 31.50, or possibly roll it up to 32 and maybe go out an extra week. And if I could lower my cost by another, maybe 30 to 50 cents, or maybe I can wash it but increase my profit target by 50 cents, that would be fine. So that's going to be on the to-do list at the top of the hour when I start class at 10 o'clock for Equities on Demand. Okay. All right. So we went through directions in Forex. We're watching the DXY. We're watching the dollar index. We're watching data this week. Currency strength chart. Keep an eye on this. Tuesday CPI news at 8:30. This isn't just for Forex. This is for everything, right? I'm telling you, this is going to be a big deal. We also have UK CPI coming out on Wednesday. So we're going to have UK inflation numbers, US inflation numbers, Eurozone inflation numbers. It's a big deal. This has been highly sensitive to the market, and I think this has a lot of positive and negative consequences for equities and for Forex. So volatility-wise, expect Tuesday's currency strength chart to be pretty nuts. We've seen it before. We've seen within 30 minutes of that CPI data, massive spikes up and down, and it's going to be an interesting day. So if you're trading with me this week, let's make a go of it. Watching the level, setting lots of chart alarms, getting a game plan together. Again, CPI this week, Fed and BOJ and Swiss National Bank next week. So next couple weeks, super busy to wrap out round out the month of September, wrap up Q3. And again, I'm telling you, this combination of CPI and where this Fed funds expected rate is going to be, this is how I get a Q4 prediction going. Okay, Lori, that website is right here. I'll just type in the chat for you, so you can just reference that website. It's free. Just check it out. It's just a browser, and this updates every 5 minutes in real time. So every 5 minutes, it'll refresh and it'll measure movements and give you your strong versus weak. Okay. All right, everybody. Do one thing for me really quickly, if you would be so kind. Click that thumbs up button for me for today's session, and also most of you that are here today are probably checking out the recording later. I would ask you to do one thing in YouTube. Go to youtube.com and search for Beyond Capital Group and subscribe to that channel as well. Obviously, if you haven't subscribed to mine, subscribe to mine. Beyond Capital Group, Jared Johnson, myself, we just had this video come out last week, the S&P make or break levels. What is a hedge fund? We have one this week that's talking about the record-breaking put levels for the markets, kind of prep to make sure that if all hell breaks loose, that pretty much institutions and hedge funds are covered. Smart thing to do, right? So we're going to see. We're going to see if the market is finally giving us that kind of contrarian trade, and if so, what that looks like. So more videos will continue to drop to our playlist here. But, from literally 0 to 124 in the last week and a half, I appreciate everyone jumping in, subscribing, checking out those videos. And, of course, leave comments, like the videos, all the good stuff. You know the YouTube algorithm by this point, right? So, I mean, look, I'll say this about YouTube. If you want to learn stuff, YouTube is the best place to go. I mean, I've been on YouTube for the last couple of years, just free education, free content, and I think it's a great place to learn. I'm literally taking my Series 65 exam this Saturday, and in addition to having master study stuff from like Kaplan and other things, I found this Series 7 guru, and he does these awesome practice tests. It's like there's so much to learn on YouTube. Just make sure it's somebody that you trust and fact check. It's like so anyway. But I appreciate everyone subscribing to this channel, staying loyal on the live sessions for the Pulver Report, and then Beyond Capital Group. We're just getting started, and we've got tons of great content coming each week. Okay, all right, traders this week. Flex traders, Tuesday, Wednesday, Thursday. Equities on Demand students every single day. If you are interested in trading with me live, You can get a free trial to my trading rooms for 27 bucks. Pulverreport.com. You can subscribe to my top weekly picks. You can also come into systems, check out some robots that I have and classes that I have in Forex. Also my trading rooms. 27 bucks for a trial. You can trade with me for an entire month. Flex is Forex, equities on demand, stocks and options. Cool beans. All right, buddy. Have a great Monday. Let's see what the CPI data does this week. Traders in the trading rooms. Let's rock. All right, buddy. See you on Friday for more Pulver Report. Let's have a good week. Bye.